For the market, up by 0.8%, even though we did see an extremely light day of trading. Melbourne Cup Day is a public holiday down in Melbourne, so only $2.2 billion worth of stock being traded. And I guess if we have a look at the trend over the last 10 years, the average performance for the ASX 200 has been a rise of 0.1%, with about $2.8 billion being traded. So it was a lower than average volume day today, but it was a good day. Every sector trending higher today, with the one exception of the healthcare space. But it was really the mining space which outperformed. We saw the materials, the energy, the industrial sectors, the leading sectors on our markets, especially the iron ore miners. Iron ore prices once again looking good, and Sundance up a massive 15% in one session. And we also saw Fortescue up by around about 4%. We saw some strong moves around the market. Xero seeing an all-time record high. The stock was up a massive 10% today. And OceanaGold, ever since it came out with its latest quarterly statement, which did see that the gold miner had returned to profitability, it has seen strong support today, the stock jumping by 6%. We also saw all-time record highs for many of those stocks related to that housing sector, which is going strong, and they included stocks like Australand, JB Hi-Fi, Harvey Norman and Nick Scali, just to name a few. So a slow day, but a good day for the market, and some impressive performances as well.
Julie, you made mention before, our own central bank, the Reserve Bank, keeping rates on hold today at 2.5%. Did we see much of a reaction on market?
No surprise in terms of that interest rate decision, so we didn't really see a reaction in terms of the Aussie share market. But given the spate of great economic data that we have seen in terms of house prices, in terms of retail sales coming above expectations, I don't think the markets really were expecting to see a change there. The statement was important, and I think some of the interesting things to come out of the statement was the weak public spending that was expected, and also the below trend growth which is expected here in Australia. And of course, if we have a look at the Aussie dollar, there was quite a big move in terms of the Aussie dollar, and you can see that after the interest rate announcement we did see the Aussie dollar trending downwards. So a negative for the Aussie dollar. And it's interesting, the housing market has been very strong, and that's had an impact in terms of stocks. If we see some of those stocks that have been performing well on the market, we saw 52-week highs from some of those retailers which are linked to household goods. They're the retailers which benefit when people buy houses and they need to stock up their homes. So stocks like Harvey Norman, Nick Scali, JB Hi-Fi, all reaching 52-week highs today. We also saw Australand reaching a 52-week high as well. So it does look like investors still backing that very strong housing market. That's going to be a key concern of the Reserve Bank. It's trying to balance that off with some of the weaker areas of the economy, like the mining sector, which is going to continue to be weak, and looks like just managing that weak public spending as well.
Stephen Halmarick, rock and a hard plummet. Look, just enough time before we go to the break. I wanted to fit some company news in, Julie. In particular, Telstra, a very interesting one. This, they have about I think it's a 70-odd% stake in essentially car sales over in China that they're looking to list on the New York Stock Exchange.
They have a 71.5% stake in Autohome, and as you mentioned, James, this is a car sales website in China, so looking to list that on the New York Stock Exchange for probably around about the $1 billion mark. And really this gives us some clues into Telstra's strategy around Asia. We know that it wants to concentrate on Asia, and it does look like it's getting its book in order in terms of some of the purchases that Sol Trujillo made. We've already seen the sale of the 50.6% stake in Sofun, which is the real estate advertising website over in China. Telstra received $433 million for that back in 2011, and now we are seeing them offloading some of their auto home website, which is a car sales advertising website over in China. So just watching Telstra carefully in terms of the Asia strategy. I think the market is expecting that we will see some of this money coming into the coffers and then reinvestment into that Asia strategy. And we're watching to see what China does, what Telstra does next in terms of its Asia strategy. I think the market expecting to see things like cloud computing and teleconferencing taking quite a big chunk of that Asia strategy.